Hello, Miss Danielle.
Hello, Lana. Let's begin our class. Today, we'll explore a memory involving Kevin. I've also prepared some questions to discuss adjustments in accounting. Keep in mind that we'll use August 31st as the fiscal year end since it's Kevin's birthday and we'll imagine that today is the same date.
Hey man, how you doing?
Hey Kev, I've been having trouble with accounting homework the prof gave us today. Since you're a professional in accounting, mind giving me a helping hand with it?
For sure, man. Tell me what we've been struggling with.
Okay, Kevin, I'm stuck on some words from the crossword in chapter 3 that the professor told us to do by Friday. You know, the one I'm talking about, adjusting journal entries. I'm not sure that I'll ever learn basic accounting.
I think you will, man, and I'm happy to help you with your studying. First, let's just start with the first one, and we'll do them in order, sequentially.
Okay, to start, it says an account with the opposite balance, credit, compared to its related asset account, which has a debit balance.
Any guesses?
I'm not too sure, to be honest.
No worries, man. The correct answer would be contra asset.
So this is somehow against an asset?
Yes, a contra asset is basically an asset account, which in essence is expected to be a credit balance with the passing of time. Common utilizations of a contra asset in businesses are accounts like equipment and vehicles. They have an inherent value and a potential to be productive for the company. But as you know, things like trucks do not hold their value for very long. So we need a way to account for the fact that in time, our debit balance assets convert to a credit balance.
Right on! The word seems counterintuitive, but I think I understand.
Right on. We got that one. That's good. Now I think we're ready to move on to the second one, wouldn't you say?
Agreed. The next question on the crossword puzzle is the difference between the cost of a depreciable asset and its accumulated depreciation.
I think solving question 9 first will help you understand question 2 better. Trust me.
Okay, then question number 9 says a depreciation method in which the depreciation expense is calculated at the cost divided by the useful life. I understand assets decrease in the value, but I don't the exact way we account for it.
Well, the correct word would be straight line, as in straight line method. This is a name we use as accountants for a method to track depreciation of an asset. The straight line means that we assume that an asset loses value at a constant rate, such that if a truck loses $3,000 in value every year, you could find out how much it will be worth in the future by using just some simple math calculations.
That is really easy and simple way to account for depreciation. You know, I thought my 2004 F-150 would actually rise in value over time, but apparently it actually doesn't work that way.
Yeah, unfortunately it doesn't. Now let's go back to question 2, which is the difference between the cost of a depreciable asset and its accumulated depreciation. Now, you tell me, what do you think it is?
This must just be the current value of the asset taken into account the straight line method. I don't know what the word is though.
The word is carrying amount, and you would be correct. Good job, brother. Let's do question 3.
Okay, sounds good. It says expenses paid in cash and recorded as assets before they are used or consumed. So I get that you buy them and they are assets, but how do they stop becoming assets?
The word is prepaids. I got the confusion. Prepaids are assets we purchase which convert to an expense once again with the passage of time. When we buy this service as a whole in the beginning, it can provide value and has not been used by us. However, at the end of the period, it has all been used and can be considered as an expense, as the time in which it would have been useful has passed. A common example of a prepaid is prepaid insurance.
Oh, that's right. So I pay for a year insurance, but the price can be broken down and divided into proportion to the amount of time that has passed.
Let's take a look at this question.
Okay, so Kevin purchased insurance on May 1st for $1,200. I might need help with the question. Can you help me, please?
Sure, Lana. You need to calculate how much Kevin would pay for the insurance monthly. We will divide 1,200 by 12 months.
So it will be $100 monthly.
And 4 months have now passed since the day Kevin got the insurance and today.
Okay, so if we multiply $100 by 4 months, that will be $400 worth of insurance since the day he bought it.
Here's how the journal entry looks. Debit insurance expense $400 and credit prepaid insurance $400.
Now let's go to the next question.
All right. Question 4 says services that have been provided but not yet received in cash or recorded are accrued. I am stumped on this one, man. I feel so bad at this stuff.
Chill out, man. No worries. The word is revenue. Revenue is the value of all sales of goods and services recognized by a company in a period of time.
Right. I should have known that one. That's why I would want to see lots of it if I was the owner of a store, you know?
Yeah, no, 100%. Indeed, more revenue means more income, or more profit would mean more you can spend on the store. Now let's go to the next question.
All right. Question 5 says the allocation of the cost of long-lived assets to expenses over their useful life. I'm pretty sure I know the answer to this one. Is it depreciation?
Correct, my guy. Depreciation is an accounting practice used to spread the cost of a tangible or physical asset over its useful life.
Lana, I've got another one for you. Kevin bought a new game station 1 month before his birthday for $5,000 last month. Do you know how to calculate the depreciation?
Okay, can try. So when we acquire an expensive stuff like this, it's a long-term asset. So the full $5,000 isn't accounted for upfront. Instead, the cost is allocated over its useful life, showing how much of it you are used up each year.
Okay, so how do you figure out how much you will need to record?
Okay, so the first thing we'll need to know the equipment useful life. And according to the memory bank of Kevin life, the game station has about 5 years of useful life.
And how much will it be per year?
Okay, so we $5,000 will divide by 5 years. Therefore, it will be $1,000 per year. And if we will divide $1,000 by 12 months, it will be $83.33 monthly.
Yes, that's good. You are using the straight line method. If you record $1,000 of depreciation each year, if we are doing this monthly, it will be $83.33 per month.
Okay, and can you please show me how the journal entry will look like?
Sure, it's straightforward. We will debit depreciation expense $83.33 and credit accumulated depreciation $83.33.
Okay, thank you. And so accumulated depreciation, is it like a running total of how much value the equipment has lost, right?
Exactly. It's a contra asset account that reduces the equipment book value on your balance sheet. And yes, its value in your records keeps dropping until it hits zero or its salvage value. But remember, this is all accounting. Doesn't mean the actual equipment is worthless or unusable.
Glad that I knew that one. Guess I'm not completely bad at this accounting stuff.
Hey, you're doing great, man. Keep it up. Next question says, cash received before services have been performed or before goods are provided.
I remember this is unearned revenue, right?
That's right. Unearned revenue is money received by a company for perhaps services that have not been performed. It is recorded as a liability on the balance sheet, and it is recorded as a liability on the balance sheet until the service is provided for.
Ah, I see. So we have their money before we complete any work, so we don't really deserve it until we do our job.
Yes, sir. Next question says, accrued blank or blank incurred, but not yet paid for or not yet recorded.
Is this accrued expenses?
Precisely. Accrued expenses are expenses that a company has incurred but has not yet paid by the end of the accounting period. They are recorded as liabilities on the balance sheet and typically include items like wages or utilities.
So we are just recognizing the amount we owe without immediately taking action.
That's correct. Now let's move on to another. It says a basis for accounting in which revenues are recorded when services are performed and expenses are recorded when incurred.
This is accrual, right?
Yes, you got this one. Accrual accounting is a method of accounting where revenues and expenses are recorded when they are earned or incurred, regardless of when cash is received or paid.
Okay. So, Miss Danielle, I've got a question. I'm looking for the next entry. Kevin finished an art project for his friend last week, but they haven't paid him yet. They promised to pay $2,000. Do we even need to make any entries since he didn't got any money yet?
Actually, that's where an accrued revenue entry comes in. He's earned the revenue, so it needs to be recorded now, even if the money hasn't hit his account yet.
Okay. And how does it work?
Well, it's simple. Since he's already completed the work, we create an adjusting entry to show the revenue earned and the amount he's owed. Here's what the entry would look like. You will debit accounts receivable, $2,000, and credit service revenue, $2,000.
Okay. So I'm recording the revenue now, even though he hasn't got paid yet?
Exactly. This ensures his income reflects the work he's done in the current period, which is what accrual accounting is all about. Thank you for your questions, Lana, and joining me for this educational session. I hope you enjoyed it and learned more about accounting.
Thank you so much, Miss Danielle. I hope to see you soon.
Bye-bye.
Bye.
Awesome. And that wraps up the crossword puzzle. Thank you very much for your insight, man.
My pleasure. Accounting can seem alien at times, but with enough exposure and practice, like anything in life, it becomes possible to understand. Hey, Colton, do you get a strange feeling that someone's watching us?
No, I think it's your imagination.
Yeah, it's just my imagination. Have a good day, man. Good luck.